Good morning, welcome to CurrencyChange Daily Market Update on Wednesday 28th of August 2013. My name is Daniel Capps, Corporate Foreign Exchange Dealer. Syria is headed for Western strike, but Russian Foreign Minister declared it will have dangerous consequences for the region. European stocks fell, extending the biggest drop in 9 weeks, also while oil rose to more than a 2-year high. The Indian rupee sank to a record low and US Treasuries actually declined. With regards to the USA, last week's IMM data report showed aggregate net US dollar long positions declined further in the week to 20th of August, primarily the result of a sharp rise in long euro positions. This week Wall Street and Washington are also loving to spread fables that facilitate feelings of bliss among the investing public. For example, recalling 2005 when they inculcated to consumers the notion that home prices have never and will never fall on a national basis. We all know now that how that story turned out. Along with their belief that real estate prices couldn't fall, one of their favourite consolatory mantras that still exists today, namely that foreign investors have no choice but to perpetually support the US debt market at any price and at any yield. But unlike what their mantra claims, the latest data shows weakening demand in overseas purchases of treasuries. According to the US Treasury Department, there was a record $40.8 billion of net foreign selling of treasuries in June. That was the 5th straight month of outflows in long-term US securities. China and Japan accounted for $40 billion of those net treasury sales. With regards to Europe, in a rare outburst, German Chancellor Angela Merkel has said Greece should never have been allowed to join the single currency. Speaking at a rally ahead of elections on September 22nd, Merkel told a crowd of around 1,000 people, German voters, that the debt crisis in Greece had been brewing for many years, and blamed her predecessor Gerhard Schroeder from the rival Social Democrat Party for letting Greece join the euro. Chancellor Schroeder accepted Greece in and weakened the Stability Pact, and both decisions were fundamentally wrong and one of the starting points for our current troubles. Media reports cited Merkel as saying at the campaign rally in the North German town of Randsburg on Tuesday. With regards to the UK this week, the speech by the Governor of the Bank of England is a key event today for the pound. In Nottingham, Mark Carney's first public speech, where he's likely to use the opportunity to reaffirm the bank's intentions to keep interest rates at an all-time low for the foreseeable future. The MPC's adoption of forward guidance earlier this month was intended to deliver this message. However, market reaction since the announcement has seen the UK bond yields rise sharply. This partly reflects expectations that the Federal Reserve will begin tapering its QE programme from September. Today's speech will closely be watched for any sign that the committee could follow up with more concrete stimulus, including the possibility of more QE. The Bank of England's forward guidance has sought to cap bond yields at the short end, but instead, in recent weeks, gilt yields have climbed to multi-year highs and the pound's appreciated against the dollar as the UK economy has shown signs of long-lasting improvement. With regards to Asia, this week Japan expects to spend a record $257 billion to service its debt during the next fiscal year. A document obtained by Reuters showed underscoring the huge burden created by the government's borrowings. The amount to be allocated for debt servicing for the year that will begin on April the 1st is nearly as large as the gross domestic product of Singapore alone, which the World Bank put at $275 billion in at the end of 2012. Japan's Ministry of Finance, charged with drafting the state budget and issuing government bonds, will request 25.3 trillion yen in debt servicing costs under the budget. The document showed on Tuesday that will be up 13.7% from the amount set aside for the current fiscal year, reflecting the ministry's plans to guard against any future rise in long-term interest rates. Live interest rates, cable is 1.5512, sterling euro 115.95, sterling Aussie 174. The dollar moved lower since yesterday's market moved to safe haven mode in response to a possible flare-up in Syrian hostilities. In the government's use of chemical weapons. Euro sterling moved higher as Germany IFO data indicated that German businesses' climate and conditions are on the upswing. The economic agenda for today, we have money supply for Europe out at 9 o'clock. Most importantly today, Mark Carney speaking to Parliament at 1:45, and US pending home sales at 3 o'clock for the US. If you require any further information, please visit CurrencyChange.com or contact us on 0207 373 2686.